Welcome back then. Just to reiterate, before the break, I had mistakenly said that the police minister is Minister Nathi Mthethwa. My apologies there. Of course, he's Arts, Culture, Sports and Recreation there. Indeed, the Minister of Police being Bheki Cele, as we were, of course, in that media briefing then with the Police Minister, Bheki Cele, as well as the National Police Commissioner there, Khehla Sithole. So my apologies with regards to that one there. Also then checking in on the markets just very quickly. Well, it certainly has been a negative start to the trading picture for the most part, especially out in Asia. It seems that the focus is shifting towards perhaps questions around the US economy and whether they'll be able to get things on the road there. But the bigger question is the increased number of coronavirus cases in the United States and Europe is certainly worrying investors. Another wave means that the rest of the globe is going to slow down quite dramatically when it comes to the growth prospects. And if the world is unable to continue to grow from the slump that has already been set from the coronavirus pandemic this year, it means that more suffering is on the way, not just for investors, but certainly for consumers as well. So negativity across the board for the most part as well then, with the Shanghai Composite going down 0.8%, only slightly down then for the Nikkei around 0.1%, but the Hang Seng and Hong Kong managing to tick higher there around 0.5%. Negativity all across the board there, with the DAX being the biggest loser out in Europe, that going down 2.33%. As I said, Europe is exactly where the high number of cases are indeed being felt. The likes then of France indeed putting in new measures, Spain suffering quite heavily as well on that front, even new measures being put forward then with regards to lockdown restrictions across some parts of Europe, which has hurt market sentiment, and it does mean that a whole lot more needs to be done in order to curb the spread of the coronavirus. Not just do we need the vaccine, but certainly a whole lot more awareness when it comes to what exactly needs to be done in curbing that spread. So investors worried across the board on this front. Pretty much the same picture on the local front then. We're bound to suffer at the hands of the coronavirus sentiment that has spread into the market picture. 0.5% weak as the JSE All Share back above that 55,000 point mark. One of the big losers today is the financial counters, taken on by the banks, which have lost 1.25% there as well. So things aren't doing too well then for the banking counters, and they've suffered as well then today. Although we are seeing platinum shares and the mining shares actually go a touch higher, but it wasn't enough, however, to push up the resources, which have fallen off 0.33%. Some of the more diversified miners, the likes of BHP Billiton, unfortunately not doing too well today, so that has pushed down the resource counter overall. Industrials as well being pegged back more than 0.5% weaker at this point in time of this lunchtime trade, with South Africa's listed property space more than 1% weaker as well, so some negativity there. The negativity continues. The big board with regards to what exactly are the big stocks that have fallen today on the JSE All Share, Mira, Montauk, Steinhoff as well going down nearly 4% there, with Netcare also seemingly going down by a similar mark. Netcare sitting at 14 Rand and 16 cents, but there is some positivity. The likes of Omnia going up 3.6% to sit at 42 Rand 74 cents a share, with Fugile also going up 3.4% there. Onto your commodities board then, the Brent crude price is down nearly 2% at this point in time. Now let's explain this one again then. The increased number of COVID-19 cases means that demand for fuel is bound to go down, because less people will be able to get back to work as industries begin to perhaps hold back and shut down just a little bit. If the fuel demand drops off, it means that the price of oil is also bound to go down as you try to match up to that supply picture that is currently in place. So it has gone down nearly 2%. It's at $40.94 a barrel. Onto your other commodities then, platinum price 1.5% weaker, so not really any more demand with regards to that one. Again, a similar picture to Brent crude in the state of demand there as well. If less cars are on the road, you don't need to manufacture as many cars, so the catalytic converters that are put through from platinum and palladium mean that they're not in demand as much as they used to be, so that means that the price will also then slack off a little bit there. But as investors fear, the one thing they do pile into is gold, and that is why the gold price then has gone up, even if it is just a touch, sitting firmly above that 1900 mark at $1,904 a fine ounce there. Seemingly not positive picture then for the local currency, even if it is only slightly down. It's around 0.5% weaker than 16 Rand 26 then for a greenback. The euro though will cost you 19 Rand and 22 cents. The local currency is just over 0.1% weaker on that front, with the British pound then bound to cost you 21 Rand and 23 cents. Let's head on over now to Bright Khumalo, who of course joins us as we unpack this market picture just a little bit more. Bright Khumalo from Vestact Asset Management. Thank you so much for the time. But so negativity across the board, increased number of COVID-19 cases across the globe means that investors are now beginning to shy away. A second wave is coming by the seams of things, and it's not just in COVID-19 cases, but in the downward spiral of the markets. Is that the case?
Of course, I mean, those go hand to hand, right? I mean, you look at the past week, U.S. markets were very quiet. The S&P 500 closed about 0.5% down, while the JSE here at home was up only just 1 point, not 1 percentage point, just one JSE point. So that was basically the markets in the last week. But this week is bound to be a little bit more spicy, like you're saying. I mean, the US has recorded over 50,000 new COVID cases per day for over 7 days. It's not looking good there. Like you say, France is having their own problems, and they're reinitiating those lockdown restrictions. We're seeing the UK doing the same thing. Italy again, everyone is urged to stay at home, use their masks. But other things that will be driving the markets this week, I think, is it's going to be, this is the last week, basically a full trading week before US elections. So anything could literally drive the markets. Like you're saying, COVID cases is one on the one hand, but you've got the Chinese government also meeting to set their 5-year goal plan. So that's also going to play a big part. And obviously, this is the final week as well for earnings in the United States. So you will see a lot of big single day moves driven sectors there. So we're looking forward to all of that.
Yeah, it becomes very interesting. Those earnings pictures will get even worse as things progress into the next quarter. Then if, of course, that second wave, of course, does come to the fore also. On the local front then as well, not really too much to write home about on the equity news front, but we are seeing a few changes out in MTN. But famous brands, though, they're going to certainly struggle along at this point in time, aren't they?
Yeah, so... famous brands, remember they went and bought Gourmet Burger Kitchen from the Eindhovens back in the UK. That didn't do so well because burgers weren't so cool anymore and people weren't buying burgers. They had to write off that asset by a lot, and obviously it has shown in the share price. It's lagged prior to this whole COVID-19 pandemic, and then comes, you fast forward to the pandemic, people were not allowed to go outside to go buy these burgers, but they were allowed, to order, from all of the other, businesses, but it just hasn't recovered at all. It's very hard to operate, quick service restaurants in this kind of market. And holiday season doesn't seem to also coming to save them, now in November, December, because again, if the second wave is coming, like you're saying, it's not going to bode well for these businesses, and that consumer behavior that we see during nice times in December, it's not going to help them much. So it's very tricky. It was a very tough first half of the year, ending in August for this business, reporting an operational loss of 110 million rand, something we haven't seen from this business, in years. So this just shows you, bad operating environment, combined with a bad acquisition, gets us where we are today for them.
So difficult, but if we continue on sort of a retail space, if you want to call it that, Massmart reporting just a more than 1 billion rand loss when it comes to just liquor sales alone. 5.7 billion rand lost in sales related to lockdown bans. Clearly, the lockdown wasn't too good for them in that respect.
Correct. I mean, the liquor ban in South Africa has been, the biggest own goal from the government side. I mean, they weren't able to collect enough taxes, and again, on Wednesday we're expecting the midterm budget to come through, which is going to show us exactly how they missed out on those taxes, and now they're going to be passing them on somehow to us, the remaining taxpayers here in South Africa, because the rest, the smart ones, have left already. It's just us remaining. So it's unfortunate on that front. But coming back to Massmart, before I got digressed there, sales 60.5 million rands. That's for the 9 months. Obviously, ending in September. If you look at those numbers, I mean, it's 9% down as compared to the same time last year. If we saw some price increases coming through, like you said, about 4.5% on average for the business. That has helped curb some of those losses, but it just wasn't enough, because the alcohol ban was a very big thing for the likes of Macro and Game, because that's where they sell these in bulk to the bottle stores, Ekasi and the like. So it has affected them massively, and obviously the government couldn't collect any of those taxes because they had put a ban on them. So it's a vicious cycle when it happens like this.
Bright, not much time left though, but very quickly, once you've bought things like Edcon's stores, well, Jet stores should I say, the last thing you'd want as Foschini Group is to see sales not necessarily go up. Having bought those stores, surely they would have hoped that perhaps they'd get things going, but things haven't gotten going for the Foschini Group yet.
Correct. I mean, it's going to take a while, right? Because we're talking about things like, disposable income not recovering, even though in some countries it looks better than others. I would talk about, tourism, which you're not seeing any tourism, because, visitors of, the country tend to spend more than locals. Again, this trading statement shows that it's been a very tough 6 months for this business as well. Nothing new here. They also happen to operate in the United Kingdom, where things was equally bad. So, without that foot traffic and without those tourists, unfortunately, fashion is not going to be doing well at all, including fast fashion. So, it's there's no place to hide as a retail investor at this point.
Right, appreciate the time. Thank you so much for it. Then on this Monday afternoon, it's lunchtime trading here on the Johannesburg Stock Exchange. Down, what's it, just over 0.5% then is the picture at present. That's how we sit for now. Will things get better? Will they get worse? Only time will tell though. It does bring things to an end though here at the Johannesburg Stock Exchange. My colleague Nompumelelo Sizebo will have more news then for you at the top of the hour. We do have your weather details though, so stay tuned for that. From me though, here at the JSE, that's where the buck stops.